Good morning, traders. Welcome to the TMT stock market strategy video for Friday, November 4th. Well, the selling continues. We're pretty much down about 8 days in a row. And what you see in front of you is the VIX, and you can see how the VIX has literally screamed off of this pretty much as golden support area that has done so many times, right off the literally to the penny this time. And now we're back up and exploded higher outside of the Bollinger Band. We're looking for a buy signal for the market, sell signal for the VIX. We haven't done so as of yet. Maybe today could be the day. Non-farm payroll numbers come out 8:30 Eastern here in the United States. So we're just going to see what happens. We're going to play it one step at a time, one day at a time. We are a little bit extended. Daily charts are overextended. Short-term charts are extremely oversold. So we're looking for some sort of a snapback rally only and only to be sold into again. That's what I'm looking for. However, we do have the canary in the coal mine, which is obviously the elections that are out here coming in on Tuesday. So anything can happen. I still think that the market sell off even after Hillary Clinton gets the win. I just think that there's too much uncertainty out there. Even with Hillary Clinton win, I think Wall Street's starting to realize, we probably got issues either way. So we'll see what happens, guys. We just want to trade price action, trade what we see. So let's get right to it. Want to show you the VIX. You could see here, and we're overbought. You can see the RSI here. You could see our stochastics, and you could see our MACD screaming to the upside. So logical spot would be taking a little bit of profit, maybe pulling back in here a little bit to the 20, maybe 17, $18, and then one more push higher. But I do think volatility is here to stay, and like I mentioned many times, I think it's going to be a great fourth quarter. It's shaping up to be, at least anyway. Here's the stocks above the 50-day moving average, and I mentioned for the last good 5 weeks that TMT's trading model was on a sell signal and has been on a sell signal. So the model works, guys, and it's really a pretty reliable indicator of what we use. We use a basket of indicators as well as price. So you can see here, this is one of them, stocks above the 50-day moving average. You see that 27%. We're getting into washout territories, okay, in a lot of the indicators I see. So we're still on a sell signal, and even if it bounces, it'll probably still stay on a sell signal. Excuse me, but we'll probably just get another spot to sell the market. All right, but right now we're still here. So we're looking for some sort of a relief rally, some sort of a short covering rally, and then we take it from there. Okay, now let's take a look at, more importantly, the indexes. You can see here RSI literally down below 30. MACD really getting oversold. And look at the volume. See, volume on the way down is starting to lighten up. Okay, that's also telling you that the sellers are starting to dry up down here at these levels. All right, now a couple things I want to point out to you. I mentioned the 210.50. Remember, I said watch the 203 area. This is that 76.8% retracement off the Brexit lows, right? That we're looking for a gap fill. So the next target area is going to be right around that gap fill area. Now, let me give you a little bit of the bigger picture. We have this big bearish rising wedge, which I've shown you for the last couple of months, and we had definitely have triggered, right? We broke down and closed twice out of the bearish rising wedge. You measure the mouth of the wedge, right, which is 30 points, and you measure it and you take it to the top of this lower trend line. That gives you a target of 185, which is logical because the 185 comes into play, and I'll show that to you. Comes in here, comes at the almost at the bottom of the wedge. So usually what it does, it retraces back all of the move. So to me, I am looking for the bigger picture, and then we would really reevaluate and say, if we broke 185, then the markets are really in big trouble. But this could be a normal retracement, a correction, a small correction, then we can start going back higher again. But that's the target, the bigger picture target. Shorter term target's going to be the 203.68, which would be that gap fill area here. Okay, and that's in the spiders. Next is going to be the 60-minute. Just want to show you that we're looking at this area here, 206.83, and then ultimately 206. But you could see no positive divergence at all in the 60-minute chart. Okay. Next is going to be the transports. We have a broadening top here. All right, but however, this could be negated. Transports have been holding up very, very well. I'm surprised by the 8 days of selling. We've gotten really no real selling here. That could be also a bullish sign. Just keep that in mind. IWM really just getting decimated here. Took out the 200-day moving average. So we're sitting on the next step's going to be the 38%, 113.46 for you guys out there for the longer term swing that you're trying to keep to short. That's going to be the next target in the IWM. And last is going to be the Qs. The Q is going to be the obviously 200-day moving average at 113.29, but ultimately 38% retracement and the 50% retracement is going to be really coming into play here in the next couple of weeks. Take a look at the thin zone we have, and that's what's going to happen. As soon as we take out that Brexit low, I think we're going to flush all the way back down here. I think tech is in trouble. We have a sector rotation, money coming out of technology going into other the safe haven plays, especially with the Facebook news. They really didn't report too well, and their guidance actually they reported top and bottom line really well, but their guidance going into 2017 wasn't what Wall Street expected. So just keep that in mind. All right, guys. Hope it helps. Watch. Don't forget non-farm payroll number reports at 8:30 a.m. today. It's definitely going to be a market mover. Have a great day and enjoy the weekend. We'll speak to you on Monday.